All right, if you're watching markets right now, you probably felt it before you saw it. Silver didn't just drift higher, it moved. And if you're thinking, okay, that's just another speculative pop, stay with me, because the real trigger isn't what most people are talking about. This just happened, it's not fully priced in, and silver's reacting before the headlines catch up. I want to walk you through what's going on in real time, why this matters to you, and how you can spot this pattern before it shows up on everyone else's radar. If you're watching now, you're ahead of the conversation. Your job is to understand the mechanism, not just react to the price. Before I explain what caused this move, let me teach you something most people miss about silver. You probably think of it as a precious metal, a cousin of gold. That's only half the story. Silver lives in two worlds at the same time. It's a store of value when confidence breaks. And it's a critical industrial input when economies try to function. Think of it like a bridge that carries traffic in both directions. When either side gets stressed, that bridge feels it immediately. When both sides get stressed at once, prices don't ease into it. They jump. Here's what makes silver different from gold or copper or anything else you're watching. Gold is money when trust breaks. Copper is demand when growth happens. Silver is both at the same time. It's in solar panels, electronics, medical equipment, batteries. But it's also what investors grab when they think the system's getting shaky. So when you get a shock that hits industrial supply chains and confidence at the same time, silver doesn't wait for confirmation, it reacts. And here's the key. When traders look at silver, they're not just looking at one chart. They're watching industrial data. They're watching currency markets. They're watching sentiment around cooperation versus confrontation. All of it flows into one asset. So what does that tell us? It tells us that silver moves early when the system shifts, not late. If this is making sense, drop a comment below and let me know what you're seeing in your markets. Now, here's what's actually happening. A 25% tariff just got dropped on South Korea. Not hinted at, not floated, announced. And when you hear tariff, your brain might go to politics or trade negotiations, but markets don't care about speeches. They care about cost structures and trust. So when that tariff hits, production costs go up fast. Autos, pharmaceuticals, advanced manufacturing, all of it. That's the first domino. The second domino is confidence. Tariffs signal that cooperation is off the table and leverage is back on it. That's a regime shift, not a tweak. And here's what most people don't realize. South Korea isn't some random player. They're a critical node in global supply chains. They produce semiconductors, batteries, steel, chemicals. When you put a 25% tariff on that, you're not just raising prices. You're forcing manufacturers everywhere to rethink their entire cost structure overnight. They've got to hedge. They've got to scramble. And when they scramble, they don't just sit on cash. They move into assets that protect them from instability. So when that trigger happens, here's the cascade. Manufacturers scramble to hedge costs. Investors start questioning supply chain stability. Currency risk creeps back into conversations that didn't include it last month. And silver sits right in the middle of that mess. It's needed to build things, but it's also where money runs when the system feels fragile. That dual demand hits at the same time. That's why silver doesn't move politely in moments like this. It gaps. Now, let me layer in the second piece, because this isn't just about tariffs. It's about what tariffs signal to the broader market. When you shift from cooperation to confrontation in trade policy, you're telling the world that the rules are changing. And when rules change, trust erodes. When trust erodes, people protect themselves. They buy hard assets. They diversify out of currencies that might get caught in the crossfire. They look for things that hold value when agreements fall apart. Silver checks every one of those boxes. And here's the part that should make you nervous if you're ignoring it. This move isn't being driven by retail hype or social media chatter. It's fundamentals reacting to stress. You're not seeing Reddit threads pumping silver right now. You're seeing institutional flows, hedging activity, industrial buyers locking in supply. That's a different animal. When retail drives a move, it burns out fast. When fundamentals drive a move, it has legs. Now let me show you what very few people are talking about. The convergence. You've got rising input costs hitting manufacturers at the exact same time you've got investors looking for safety. Normally, you get one or the other. Industrial demand drives it, or safe haven demand drives it. When you get both at once, that's when silver doesn't just trend higher. It re-rates. And re-rating means the market decides that the old price range doesn't apply anymore. It finds a new level and holds it there until something major changes. Let me zoom you out, because this isn't new. This is the exact same playbook we saw during earlier trade wars, during periods when global systems shifted from cooperation to confrontation. In the early 1970s, when Nixon closed the gold window and tariffs started flying, silver didn't wait for the crisis to fully unfold. It front-ran it. Between 1971 and 1974, silver went from under $2 to over $6. Why? Because the system shifted from fixed rules to negotiated leverage, and markets sniffed it out early. Fast forward to 2018 and 2019. The U.S. and China start escalating tariffs. Trade becomes a weapon again. What happened? Silver bottomed in late 2018 around $14, then climbed to over $19 by mid-2019 before the first wave even fully played out. Same pattern. The market didn't wait for confirmation. It moved on the signal that cooperation was breaking down. Every time tariffs escalated quickly, silver sniffed it out early. Not at the peak of fear, at the beginning of it. And here's what you need to understand. Zoom out, and you see the larger story. When trade becomes a weapon, monetary stress follows, and silver prices re-rate violently. It's not a coincidence. It's a pattern. And if you know the pattern, you're not reacting. You're anticipating. Now let me be skeptical for a moment, because I want you to hear independent thinking, not just hype. Could this be wrong? Sure. Could silver pull back if this tariff gets walked back or offset with exemptions? Absolutely. Markets overshoot sometimes. And there's always someone saying, this is just manipulation or a crowded trade or some conspiracy by big banks to shake out the little guy. Could that be part of it? Maybe. Here's the thing. It doesn't actually matter whether there's some motive behind the scenes. The mechanics are what matter. Price action without context is noise. Price action aligned with structural change is information. Focus on what you can control. The signals, not the narratives. You can control whether you understand the pattern. You can control whether you're positioned appropriately for your risk tolerance. You can't control whether someone's manipulating the market or whether a tweet changes policy tomorrow. So, stay focused on the mechanics. There are probably 3 types of people watching this right now. The first type is already in silver, and you're wondering if this is finally the move. You've been patient. You've been stacking. You watched it chop around for months or years, and now you're seeing this spike, and you're asking yourself, do I take profits? Do I hold? Do I add? I get it. Here's my advice to you. Don't anchor to price targets. Anchor to conditions. Watch the trade rhetoric. Is it escalating or de-escalating? Watch industrial demand. Are factories still buying, or are they pulling back? Watch real rates. Are they rising or falling? Those conditions will tell you whether this move has legs. Your job isn't to guess the top. Your job is to stay aligned with the conditions that drove the move in the first place. The second type doesn't own silver at all, and you think you missed it. You're watching this price action, and you're kicking yourself for not buying when it was lower, and now you're wondering if it's too late. Here's what I'll tell you. You didn't miss the cycle. You just missed the first signal. And that's okay. Not everyone catches the bottom. Your job now is patience and planning, not chasing candles. If this tariff situation escalates, if more countries get hit, if industrial demand stays strong, there will be pullbacks. There will be consolidation. That's when you build a position. Don't chase it up. Wait for the market to come to you. And in the meantime, learn the pattern so you catch the next one earlier. The third type is skeptical of everything, and honestly, that's healthy. You don't trust hype. You don't trust narratives. You want proof. For you, I'd say this: focus on learning the pattern. You don't need to act today. You don't need to buy silver tomorrow. But you should recognize this setup the next time it appears. Trade tensions plus industrial demand plus confidence erosion equals silver re-rating. Write that down. Study the historical examples I just gave you. And when you see it again, you'll know it. Different paths, same principle. Understand the mechanism before you place the trade. So here's what I want you to answer in the comments. Which type are you? Are you already in and managing a position? Are you watching and waiting for an entry? Or are you learning and building your pattern recognition? Let me know, because I want to understand who's watching and how I can help you navigate this better. Here's where I stand. I'm not pounding the table emotionally, and I'm not dismissing this as hype. I'm watching three things closely. First, I'm watching whether tariffs expand or inspire retaliation. If this stays isolated to South Korea, that's one thing. If it spreads to Europe, to Japan, to other major trading partners, that changes the scale. And if those countries retaliate with their own tariffs, you're looking at a full-blown trade war, not a negotiation tactic. Second, I'm watching whether silver holds gains during equity rallies. That's a tell. If stocks rip higher tomorrow and silver doesn't give back the move, that tells you something. It tells you this isn't just risk-off positioning. It's real demand meeting real concern. Third, I'm monitoring industrial demand data. We should see confirmation in the next few weeks. Are factories ordering more silver for production? Are inventories tightening? If price is moving but fundamentals aren't following, that's a red flag. Based on my analysis, this tariff move was structural, not random. It wasn't floated as a possibility. It was announced as policy. That matters. Silver's response wasn't emotional. It was mechanical. Industrial costs went up. Confidence got shaky. Investors hedged. Silver moved. That's not speculation. That's cause and effect. The fundamental picture hasn't changed overnight, but the risks are tilting. And when risks tilt in global trade and monetary stability, silver prices re-rate before the consensus catches up. If history rhymes and silver holds above this new level, the move that follows could be larger than what we've seen so far. I'm not predicting a moonshot. I'm saying the conditions are aligning for sustained higher prices, not just a one-day spike. And if you understand why that's happening, you're ahead of 90% of the people watching this market. I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've told you. Check the tariff announcements. Look at the historical charts. Watch the signals I mentioned. Make decisions that fit your risk, not someone else's conviction. If you made it this far, you're serious about understanding markets, not just reacting to them. That mentality will serve you well. If this breakdown helped you see something you weren't seeing before, hit that like button, share it with someone who needs to hear this, and subscribe so you don't miss the next one. I'm breaking down these patterns in real time so you can recognize them before the crowd does. Stay sharp out there. Question everything. Verify the data and make decisions that fit your risk, not the noise.